In this video we will be exploring whether Japanese candlesticks patterns can truly be used to predict the stock market. Predicting is difficult, especially about the future. But what if we predict about the past? So we actually very easily can predict the past by downloading historical data from Yahoo Finance and compare the predictions of Japanese candlesticks patterns for the last year and compare it to what actually happened. So in this manner we will be able to either bunk or debunk Japanese candlesticks patterns. So can Japanese candlesticks patterns be used for stock trading and predicting the market? Let's find out. So, our method for testing the validity of Japanese candlestick patterns for stock trading and predicting the market will be as follows. We will create Python code and utilize the Python library, TA-lib, which incorporates numerous technical analysis tools, including methods for recognizing Japanese candlestick patterns. Additionally, we will use the Python library, yfinance, to download historical data from Yahoo Finance. Now, here is our plan. We will not test individual stocks, but a large number of stocks, specifically an entire index. We will take all the stocks from the S&P 500 index and download historical data for the last year of all 500 stocks. Then, we will identify specific Japanese candlestick patterns on each individual stock and store the pattern name along with the dates in a database. Next, we will perform statistics on the database and execute SQL statements to find all the dates that share a large number of the same Japanese candlestick pattern, such as the Morningstar pattern. Finally, we can compare these dates to the chart of the actual S&P 500 index on Yahoo Finance. If a significant number of individual stocks exhibit the pattern on the same date, then, if Japanese candlestick patterns are able to predict anything, the chart of the actual S&P 500 index should show some kind of change in the market from bullish to bearish or vice versa. In this way, we will be able to either confirm or debunk Japanese candlestick patterns and decide if they are valid for predicting the stock market or are nothing better than a coin flip. Okay, here is the Python code and the detailed steps. You can find a link to the Python code in the description. We will walk through the code together. So, first, here we will include all our libraries at the top. Next, we have two subroutines. One for downloading a list of all stock ticker symbols in the S&P 500 index, and a similar routine for the Nasdaq 100 index. I left in some debugging code that is commented out. In case you want to experiment with this or debug, it's nice to have, just in case. Next, we will create a folder named by the index and the date. Here, we will store all the historical data from Yahoo Finance in Excel files. Each ticker symbol and stock will have its own Excel file. Next, we will connect to our locally installed MariaDB database. You should change the password to something you prefer. Finally, we will download all the data for all the stocks from Yahoo Finance or load previously stored data. We make sure we can load previously stored data, so we don't overload Yahoo Finance every time we run the program. Then we can analyze different Japanese candlestick patterns without having to download the historical data again and again, but reuse it instead. Finally, we do our pattern recognition and locate all the Japanese candlestick patterns of a specific pattern. Here we look for the Morningstar pattern, and every time we find it, we use SQL to insert it along with the stock symbol, the date, and the pattern name into the MariaDB database. And that is it. That is our Python code. So let's try to run it. Okay. So, we have everything set up and are ready to run. Let's click the Run button and execute the Python code. And we will see to the right that immediately it will start to download all the historical data, and you will see a list of all the ticker symbols scrolling on the right while it downloads data for all 500 of the stocks. Okay, let's fast forward. Now we can see that the Python code has completed the download, identified all the Morningstar patterns in every stock, executed the SQL commands, and inserted numerous rows into the MariaDB database. With the Python code finished, let's delve into the results. We'll conduct some statistics to explore whether there's any correlation in our data stored in the MariaDB database and the corresponding chart of the S&P 500 index. So, here we are inside Heidi SQL, armed with a SQL query that tallies up all occurrences of the Morningstar pattern on each date. To refine our focus, we'll tweak the SQL to only consider days with the highest occurrences, setting the minimum occurrences to 15. Now, we have just a handful of rows displaying dates with the most prevalent instances of the Morningstar pattern. If our predictions are trustworthy, we should observe a shift from bearish to bullish on the chart. So let's examine the S&P 500 chart. But before we do, let's isolate and take note of the top 3 dates. January 20th, 2023, with 61 occurrences. November 30th, 2022, with 49 occurrences. And April 27th, 2023, with 38 occurrences. Finally, let's compare the S&P 500 chart on Yahoo Finance to our data. Armed with our top 3 dates in mind, we'll locate them on the chart. First, let's examine January 20th, 2023, with 61 occurrences. The morning star pattern, comprising 3 dates, is expected to signify a shift in the market, ideally resulting in a price increase. As you can observe, it identifies a minor dip in the curve followed by a rise in price. So it locates a small morning star pattern correctly. However, it would have been more advantageous if it had pinpointed the more significant market change to the left here. Instead, it highlights a relatively inconsequential point on the curve, providing limited insights into the market. This spot does not appear to be a favorable buying position. Let's repeat the process for our second date, November 30th, 2022, with 49 occurrences. Once again, it accurately identifies a morning star pattern. However, it is immediately followed by an evening star pattern, and the subsequent days result in a price decline. This position also does not seem to be a favorable buying opportunity either. Finally, let's replicate the process for our third date, April 27th, 2023, with 38 occurrences. Once again, it accurately identifies a morning star pattern. And once again, it would have been more advantageous if it had pinpointed more significant market change to the left here. Instead, it highlights a relatively inconsequential point on the curve, providing limited insights into the market. Nor this spot appear to be the most favorable buying position. Still, it is a reasonably good place to buy, although it's late in the midst of an upward trend. So, let's perform the same comparison for the evening star pattern. First, we'll modify our Python code and run it again to insert new data into our MariaDB database. We'll change the code to search for the evening star pattern instead. After this minor modification, we'll execute the code again, and our MariaDB database will be filled with the new data. So, we are back inside SQL, and we can see all the new data with occurrences of the evening star pattern. We'll modify our SQL query to consider days with the highest occurrences, setting the minimum occurrences to 15. Once again, we isolate and take note of the top 3 dates. December 28, 2022, with 61 occurrences. March 22, 2023, with 47 occurrences. And March 7, 2023, with 34 occurrences. So, let's compare the S&P 500 chart on Yahoo Finance to our data from the evening star pattern. Again, armed with our top 3 dates in mind, we'll locate them on the chart. First, let's examine December 28, 2022, with 61 occurrences. What we are trying to find is an average of all the stocks and identify a common pattern. As we observe, instead of locating an evening star pattern, in the midst of an area on the curve, we find a morning star pattern. In this case, the Japanese candlestick pattern is misleading. This spot does not appear to provide any insights into the market. Quite the opposite. Let's move on and look at the other 2 dates. We repeat the process for our second date, March 22, 2023, with 47 occurrences. This time it accurately identifies an evening star pattern. However, it is in the middle of an upward trending curve. Once again, it doesn't provide any insights into the market. The evening star pattern should signal a potential downward change in the price direction. Instead, here we find the evening star pattern in the middle of the upward trending curve. Now, let's examine our third and final date, March 7, 2023, with 34 occurrences. Once again, it accurately identifies an evening star pattern. However, it would have been more advantageous if it had identified a more significant market change to the left here. Instead, it highlights a relatively inconsequential point on the curve, providing limited insights into the market. Although this time it was located on a downward trending curve, late in the midst of a downward trend, this spot does not appear to offer a very clear insight into the market either. So, what can we conclude from this? Similar analyses can be conducted for all other Japanese candlestick patterns. The consistent conclusion seems to be that there isn't a clear correlation between Japanese candlestick patterns and market developments. It appears that the Japanese candlestick pattern is debunked and does not seem to predict the stock market. Do you agree with this conclusion? Feel free to try this analysis yourself using the Python code we used here. Do you reach the same conclusion? Let me know in the comments below. Let me know which other technical analysis tools you would like me to analyze in a similar manner. I plan to explore tools such as moving averages, momentum oscillators like relative strength index, stochastic oscillator, and moving average convergence divergence, or volatility indicators like Bollinger Bands. Additionally, I'll consider cyclic indicators like detrended price oscillator and Chand momentum oscillator, as well as other tools like Fibonacci retracements. Which tools would you like me to take up next? Share your preferences in the comments below. Thanks for tuning in today. If you have any questions or comments, feel free to share them below. Don't forget to subscribe for more exciting insights into the world of finance. See you next time.